one of the defining factors, as I mentioned about Avalanche, is the ability to build your own blockchain. We do not believe in the single pipe theory. If you look at all of our competitors, they are a single pipe that assume that everything will flow through that one pipe, right? So if you look at that setup, that assumes that stable coins and crypto tokens and stocks and bonds and everything else will run through one pipe alongside each other. It just doesn't work that way. For us, we allow for custom purpose-built blockchains that serve the business need. Someone as large as FIFA is not going to deploy alongside meme coins and NFTs and crypto native assets and everything else. They need their own setup, just like they would go to AWS or GCP to have their own servers. They're going to want their own blockchain to allow for their business use cases.
What is up, guys? Welcome to the channel where we skip the noise and get straight to what actually matters in crypto. No moon talk, just real research. And today we're going all in on Avalanche, ticker Avax. And I promise you, the story is way more interesting than the price chart suggests. We're covering what Avalanche actually is, the brutal price reality, 3 upgrades that changed everything, the big institutional money, Avax 1, the bull and bear case, price targets, and of course the final verdict. So if you appreciate videos where someone actually does the research for you instead of just vibing at the camera, smash that like button right now. Costs you nothing and helps us a ton. Oh, and this is not by any means financial advice. I'm just a guy on the internet, so please, please, please do your own research. And cool. Let's get it. Before we judge it, let's understand it, right? Imagine Ethereum is a highway with one lane. It gets congested. Fees go up. Transactions slow down. Avalanche said no. What if we build a highway with multiple lanes and let anyone build their own highway that connects to ours? Launched in 2020, it was built to solve the blockchain trilemma, being fast, secure, and, of course, decentralized all at once. Most chains can only do 2. Avalanche was engineered for all 3. How, you ask? Subnets, now called L1s. Think of the main network as a city. Subnets are custom neighborhoods, each with their own rules, their own security, their own token. A bank can run a compliant private chain. A hospital can lock down patient data. A game studio can optimize for speed. All connected to the same infrastructure. That's why institutions love this. I mean, the numbers prove that it's working, right? There's actively 75 plus active subnets that are generating about 38.2 million daily transactions. In Q4 2025, it went up by over 1,100 year over year. So that is definitely not a dead network. But let's talk about the elephant in the room, right? All-time high, $144. Current price, $9.60. That's like paying full price for a PS5, and it's now worth less than a month of Netflix. But here's what's wild. The network didn't fail. The ecosystem didn't fail. TVL doubled, transactions hit record highs, institutions deployed real money, and the price still went down. There's a disconnect. Strong fundamentals, weak price. That is the whole story of Avax right now. And historically, that gap closes in one of 2 ways. It completely dies and goes to zero, or it completely explodes. And as of March, it's worth noticing that the SEC, the US SEC, has officially classified Avax as a digital commodity, meaning institutions now have full legal cover to allocate. There is no longer any gray area for them, so the price has been painful. But what's next is the real question, right? The tech upgrades, what's happening under the hood? While the price was bleeding, the developers have been cooking. 3 upgrades in 18 months. The first one was the Etna upgrade in December 2024. Launching a custom blockchain on Avalanche used to be literally costing hundreds of thousands of dollars. But after Etna, it cut costs down to 99.9%. If it cost $1,000 before, it now costs $1. Overnight, the barrier to entry enterprise entry basically vanished. Institutions showed up immediately. April 2025 was upgrade number 2. Octane made it cheap to use. Avax. Transaction fees dropped by 96% on top of Etna's reduction. Overhauled validator economics with a pay-as-you-go model. Excuse me. The daily transactions jumped 170% in a quarter. DEX volume hit 900 million in a single day in September 2025. $900 million in one day on a dead chain. Upgrade 3 came November 2025, and that was the Granite upgrade. Transactions now settled just under 2 seconds of finality. But the real headline, Granite added support for biometric authentication. Now, this means that dApps can now let users sign transactions via their face or touch ID, dramatically lowering friction for mainstream users. No seed phrases, no wallet setup, just your face, done. That's not a small thing. That's the biggest UX breakthrough for mainstream crypto adoption in years. Near zero cost to build, near zero fees to use, sub-second speed, Face ID transaction. The tech is ahead of the competition. Full stop. If you're finding this useful, please hit that subscribe button. And don't forget to hit the bell so you don't miss the next video. Now comes the most important part. Who is actually betting real money on Avalanche right now? Let's listen to a quick clip.
It offers customizable L1s where institutions can set their own permissions, their own rules, not be subject to fee variability in other parts of the blockchain stack. This sort of customizable architecture is one of the most appealing for how that transition will take place.
And now we're seeing people over the course of the last few months and even now come and say, we want to do the same thing, but we don't want that 18-month delay. We want it in like 3 months. The time is compressing, the demand is increasing, and the growth is just tremendous to see. And I think it's a great moment for the industry and for us specifically.
It offers customized.
That was Matt Hogan of BitWise, the CIO, Chief Investment Officer of BitWise, letting us know why institutions love Avalanche. And to add on to that, BlackRock, the world's largest asset manager, tokenized their Beddle money market fund directly onto Avax, not exploring it, not planning it. That's $500 million live on chain. And VanEck launched the first US spot Avax ETF on the Nasdaq on January 2026 or 2027, excuse me. And for the first time ever, a traditional investor could get Avax exposure through their brokerage account. No crypto exchanges needed. That's completely a new class of buyers. Next was BitWise, which launched BABA, the first Avax ETF with built-in staking on the New York Stock Exchange. And it stakes 70% of their holdings, earning holders 5.4% APY at a 0.34% fee. That means every dollar flowing into BABA takes Avax off the market and locks it up. Buying pressure and supply reduction at the same time. And the rest lineup, it's Grayscale, Skybridge, Capital, Visa, and of course, Wyoming, the US state, launched the first government-backed stablecoin on Avalanche, $14 million in volume on day one. Speaking of the US government, let's watch a quick video about them using Avax for tokenization. Let's watch.
We're building our L1 on Avalanche. They've been great partners to us, and they allow you to fully customize your blockchain. So it's never been easier to kind of spin up a blockchain and create your own controls and permissions, which is really essential for when you're dealing with government records, of course. Bergen County, it's the largest county in the state of New Jersey. You know, being a real estate developer in New Jersey, I have relationships throughout the state, so it was a target of ours, and we realized that there was a big opportunity there. So we entered into a 5-year engagement with the Bergen County Clerk's Office to migrate their deed processing onto the blockchain. Wow. It's the largest blockchain deed initiative in U.S. history, and the goal is to create a permanent, immutable chain of title that preserves record integrity, mitigates deed and mortgage fraud, and provides real trust and transparency to citizens.
And to add on to that, the CME Group, the institution behind Bitcoin futures, the institution that launched Ethereum futures, just announced that it will launch Avax and SUI futures on the 4th of May, pending regulatory review, of course. Nearly 8 billion a day flows through the CME crypto derivatives platform, and they chose Avax as the next one. You don't launch these futures for dying projects. This is the market signaling something. In February 2026, Avalanche led every blockchain on the planet in net capital inflows, $135 million in a single month. This is not what a dead project looks like. And the plot twist, Avax 1. This is the part nobody's talking about. And it might be the most interesting piece of the whole story. You know, MicroStrategy, known as Strategy, the company that ditched its original business to just buy as much Bitcoin as possible and sit on it. Well, someone just did the exact same playbook for Avax. Avax 1 is the first publicly traded Avalanche treasury company. It's listed on the Nasdaq, backed by Anthony Scaramucci of Skybridge Capital. And their one mission, accumulate Avax, stake it, and yield, repeat. The numbers behind it, they are targeting over 700 million in Avax. Already raised $300 million to fund their buying. And in Q4 2025, revenue jumped 40x year over year to $1.1 million, all just from staking rewards. Why does this matter for the price? Well, because every dollar they raise becomes Avax tokens that get staked and locked up. That supply is gone from the market. Same structural dynamic that made MicroStrategy so powerful for Bitcoin is now working for Avax. So, watch the AVX stock as a live pulse on the institutional confidence in Avax. When smart money moves, AVX moves first. So now comes the bull case versus the bear case. Let's get it. No fluff, no filter. The bull case, BlackRock, VanEck, BitWise, New York Stock Exchange, CME, Visa, JP Morgan, all these big institutions with entire risk departments chose Avax. They don't do that accidentally, right? Real-world asset tokenization is the next big narrative, and Avalanche is already leading chain for tokenized real-world assets with 1.3 billion TVL, one of the leaders with Ethereum. And with price at a 5-year low, usage at an all-time high, those two things can coexist forever. Price always catches up to fundamentals eventually. There's multiple ETFs now live. The VAVX, BAVA one. Many more are still expected to launch. And the bear case, 2 years of brutal price action, patience as opportunity cost. Being right too early feels exactly like being wrong. I mean, Solana owns a retail DeFi right now. Ethereum's L2s and even the L1 are gunning for same institutional market, and this is a competitive space. While we see real-world tokenization doesn't go viral, so it doesn't get the retail excited the way meme coins do. Without the retail narrative, price recovery is slow, even when the fundamentals are strong. So bottom line, strong fundamentals, weak price action, uncertain timing, that's the bet you are currently making right now. All right, the numbers, 3 scenarios. Bear case, $6 to $9. Basically, this is when we say Avax is dying. $9 to $6, that's the bear case. Bitcoin dominance holds, actions, altcoin season gets delayed, overwhelms, unlock overwhelms ETF inflows, Avax just sits there. Painful, but possible, right? Next, the base case, that is $15 to $25, going from this current price to about here. That's the base case. ETF inflows build steadily, crypto sentiment improves, real-world asset narrative gains traction, no explosion, just gradual grind up. Average analyst predictions for 2026 sits around $18 to $19. That's a solid 2x from here. The ultra bull case, that's $60 to $100. Let's see, 60, that gets us to about $100. Altcoin season arrives. That is when Bitcoin pumps hard, ETF demand accelerates, New York Stock Exchange tokenization goes live, Avax One squeezes supply, Standard Chartered, an actual bank, has $100 $8 price target for the end of 2026. In that scenario, buying under $10 looks very smart. And that range tells you everything about the risks. It could 10x. It could stay flat for another year. Timing is the one variable no one controls, right? The verdict? Is Avax dead? No, absolutely not. Is it making investors rich right now? Also no. Here's how I see it. Here's how we see it. Avax is like a restaurant that just got a 5-star rating, hired a world-class chef, has a wait list around the block, and the stock is still down because the neighborhood hasn't caught on yet. The tech is real. The institutional bet is real. The price is just lagging for macro reasons, not ecosystem failure. That's my honest read. Full picture. You decide what to do with it. And that's Avax. Collapsing price, record on-chain activity, BlackRock, New York Stock Exchange, CME futures, the Nasdaq Treasury Company, 3 ETFs, and technology that's genuinely ahead of the pack. Did? No. Boring for a bit longer? Maybe. Sleeping giant the institutions are quietly loading up on? That's a bet I'm willing to make. If this was worth your time, please smash the like button. It takes 2 seconds. Helps this video reach more people who need to really see the real research. Don't forget to subscribe and hit that bell for more deep dives like this one. No hype, just research. Drop a comment below. Do you hold Avax? Are you buying, waiting, or completely out? What's your 2026 price target? Let me down below. I read everything. Can't wait to hear from you. And I'll see you in the next one.